All right, guys. So this is Basic Training 101. This is February 18th. I'm on a live Zoom call. This is going out to all of our groups, Missions Trading, Facebook group and Telegram group, and our new and improved Discord group. If you have any questions about joining those groups, let me know. It's going to be a great place to ask questions, find folks who are learning what's going on with this idea at the same time you are. So having a group is always great. All right. What are we looking at? So hopefully you've gone through the basic training and the basic videos that's found in Discord, trading training 101, which is absolutely free to everyone who joins that Discord group. You just have to give an email and then there it is. All right. But if you have not, this is going to be kind of a basic overview of how I approach the market every single day. Oh, that's bright.
Okay.
You can close that door. That's great. So grab you a cup of coffee, grab you a pen and a paper, and hopefully this doesn't take too much time. And let's dive in. Okay, so first and foremost, how do we even see what's happening in the market? Well, we have to utilize a website that you are seeing on my screen right now. It is called tradingview.com. Okay, tradingview.com. And once you go to tradingview.com, it's going to give you access to look at this chart or these kinds of charts. And this chart is giving you basic information about the money market. It's giving you a price here off to the side, okay? So here off to the side, you see a lot of prices, right? It's giving you at the bottom dates and times, right? And it's giving you some tools to kind of be an artist and make it look beautiful, all right? So I'll get rid of some of these drawings so that you can see my chart. All right, so check it out. We use this chart to try and make a decision. All right, and you're only going to make one of three decisions. Okay, your job is to make a decision, and that is to buy. All right, you're either going to buy, okay, you're going to sell. All right, so you know basics so far. You're so far so good. Or your last option is to I can't draw with the mouse very good. Wait. Okay, these are the basics decisions that you're going to make. Super basic, right? So when you figure out whether or not it's a good opportunity to get engaged with what the market is doing, you're only going to make one of those three decisions: buy, sell, or wait. Okay. And so when do you buy? Y'all have heard the old saying, buy low, sell high, right? Which is great for investments. But for trading, it's the same, but a bit different. So it starts like this. So if price is down here, and these little bars represent price, the green bars mean price is going up, the red bars mean price is going down. Simple as that. So if price is low, then we want to look for buy opportunities. So you see how price was kind of down here. If you look off to the side, it says 10,000. Close to 10,600. This NASDAQ 900. Everybody knows the NASDAQ, right? Well, if we were to click buy right here and price goes up, you would have made some great money because we bought when price was low and then price went up and you were in profit because you bought low. Now, typically when you buy stocks, You want to buy when it's low and sell when it's high, correct? So that's investment trading. The kind of trading that we approach the market with is called leverage trading. Okay, leverage trading means that I will enter the market at the low points on a buy, but I will also leverage trade and enter the market as a seller at the top or when price is high. Okay, and I'll enter as a seller, and when price goes down, I will still make profit. And that's the difference between investment trading and leverage trading. I know sometimes you gotta let your mind wrap around that, like, huh, you can make money when price goes down? Yeah, that's the difference. Because typically in investment trading, you want to buy low, hold it, and then watch over time as price increases. And then once you feel like prices increase to the top, then you sell and you make that money. But as a leverage trader, you can enter the market as a buyer and a seller. And if price goes down and you enter it as a seller, you are making profit as long as prices continue to go down. Leverage trading. You can look that up and look at all the great articles online about leverage trading. Okay, so with that basic understanding that I want to buy when price is low and I want to sell when price is high, then this is how we approach the market every day, except for weekends. Weekends, we just study. Okay, hopefully you got a pen and paper, and if that don't make sense, rewind this or any part of this video, rewind it and check it out. If you have any questions, let me know. All right, let's go. So TradingView has a couple of great tools, has several great tools. One of the tools we use is found up here where it says 1M, 2M, 5M, 15M, 1H, a D, a W, a M. These all are time frames. So M is month, W is week, D is daily, 1H is 1 hour, so on and so forth, all the way down to the 1 minute. Okay, so here's what's really cool, is that my chart will reflect what time frame I choose. All right. Okay, so right now I'm on the daily. As you can see back here, the little gray, it says 1D. So that means that every bar that you see on this chart, oops, let me get rid of that. Don't need that. Every bar you see on this chart represents 1 full day of trading. And so since we are closed on the weekends as a market, the last candle, this candle here, is Friday. This was yesterday's, right? So Fridays is this candle. Thursdays would be this candle. Now, if I were to click H1, then this one candle will bust into how many candles? 24. So this one candle right here, and what I'll do is I will create a little range for us to see exactly what that looks like. So if I were to highlight that one daily candle, all right, and click H or 1H, now you see 24 candles. All right, so this is one of the ways that we can microscopically know what's happening to the very minute of what the market is doing in terms of two things: price and time. These are important. Okay, so there is the whole day in this range, and I'm gonna make it somebody's favorite color, Hannah's favorite color. All right, so that's our daily. But let's change it. Sorry, let me change it to a daily color so we know. So daily is light blue. Okay. All right, what else? So this represents the whole day. Let's go back in time. Here's another great thing that TradingView does. It's called replay mode. And so what replay mode lets us do is go back in time and look at what happened. So this is why I called it back test. Okay, so I can go back in time to actually Friday midnight, which is right here. Okay, 000. Boom. So that's what I want to do. Okay, so now that we understand what the bars are doing, I don't know what's going on with it. Now that we understand what the bars are doing, red means going down, green means going up. We want to be able to enter or potentially enter in the trade, right? So what I want to do is I want to show you how I do it every day, okay? How I do it every day. How I do it every day is I keep it very simple. I keep it super simple. So what I want to know is price on its way up or is price on its way down? If price is on its way up, then I want to look for what? Buying opportunities. So I have to determine, has price been going up or has price been going down? So if I just draw a straight line, it looks like price is doing what? Going up. Well, that is true. And while it goes up, it comes down and goes up, right? So here, it looks like this push up is getting invalid or is getting rated, right? Because this is called a trend. So this trend line is getting broken right here. This happened Thursday, right? Let's pretend it's Friday. So this happened Thursday at noon and price began to just go down. Well, where is it going to go? When does it stop? Write this down. We don't need to know. We just need to react. I know they always say, hey, it's not good to react. It's not good to react. Okay, in some cases, right. In the money market, reaction is key. And how fast can you react? Okay, so number one, identify if price is going up or down. So your job is to identify, right? And then react. And how are you going to react? Buy, sell, or wait. All right. So price is going up, but currently price looks like it wants to come down. And I'm looking at 4-hour time frame. So each candle is 4 hours. And I can jump to different time frames to be able to determine what price potentially is going to do. So we play on probabilities. Okay. We play on probabilities. All right. So here's what our approach is daily. We find the trend, identify, and we want to see where price has been, right? Not necessarily the last month or anything like that, but really like the last several hours. So I would look at these 4-hour candles and let me explain to you what the candle is telling us. The candle is important. The candle is telling us 4 distinct things, okay? 4 distinct things. It's telling us, well, maybe a couple of more than 4, but it's telling us, well, in this case, if it's red, that means that price has gone down, okay? All right, if it's green, it's telling us price is going up. And these colors can change, but for right now, that's what these colors are. All right, what's most important is I want to know, where did the candle start? All right, in this case, we'll look at this big red candle right here. And at 12 noon Thursday, it started at this level right there. Okay, and I'll make that white. So, see, oops, make it white. All right, started right there. Okay, and then it made a push up. You see that little skinny line right there? That is identifying that it went up a little bit, right? So it made a high right here. So here is a high, okay? Here is where it opened, okay? So here's the high, here's the open. The open happened first. And then it tells us that it went down, 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 all the way and left this little wick right here right there, and that's a low. All right. And then it came up a little bit, and that's a close. All right. So 4 things that it told us is when it did it open, what price did it open, what time did it open, how high did it go in price here, how low did it go in price, and when did it close, what time. We know what time because we're on a 4-hour time frame. So 4 hours from noon, right? It's 4 o'clock, or in this case, 1600 hours because they use military time. All right. So high, the open, the close, and the low. 2 things to pay attention to. All right, is when price goes up, right? When price went up on this red candle, it left a little skinny line, right? So I call them candles. Everybody calls them candles. All right. So this skinny line right there, that's called, what's the skinny part of the candle? I can't draw. Can't write. It's called a wick. Okay. So that is the wick of the candle, right? So here is the wick. Okay. And oh God, help us with these arrows. And then this thick part of the bar is called the body. So you have wicks. Look at all the other candles now. You see all the wicks, all these wicks. Those are the thin lines. And then the body. So that helps you identify. Our job is to identify and react. Identify what's going on with price by way of candles. Hope this makes sense. How far have I got? All right, so we got a little bit ways to go before we make a buy, sell, or wait. Okay. All right, so what I want to do is Friday, typically, let's go forward in time to Friday at, here's midnight. So it gave me another candle right there. And then from 4 a.m. to 8 a.m., it gave me another candle. So this is what I want to look at. This is what time I come to the market, right? Between 7 and 8 o'clock. Because I know that at 8 o'clock, this candle is going to be printed. It's going to end. It's going to close. And I'm going to look at what did price do overnight? All right. So I see that there is a wick here on the bottom. All right. All right. I see that there's a wick on the bottom here that happened between midnight and 4 a.m. right here. So what I want to do is I want to treat these wicks very special because let me show you why. These are creating what I call gold bars. And they are based on 4-hour time frame wick. So if I could find a wick on the 4-hour time frame, now I don't need to necessarily mark up every wick. I just need to mark up the ones that I'm closest to or what price is closest to. All right, so pay attention. Here's a wick that happened between midnight and 4 a.m. because I'm on the 4-hour time frame. Right, so I'm gonna highlight that. I'm gonna create this little yellow box. I call them the gold box, and you're gonna see why in a sec. That's the gold box. Okay, so if price, and I have to make a decision. If price comes beneath this gold box, I'm gonna click sell. All right, that's it. That's the secret. Not too hard. It's never hard. We always make it hard. All right. Now, what else do I see? All right. So I see that there's several red candles here. Do I need to mark up every wick? No. I just need to mark up one. Which one do I mark up? Well, if price is going up, which between 4 a.m. and 8 a.m., it gave us a green candle, which we hadn't seen a green candle since Thursday at 8 a.m. So we going up. If we go up and we get to this 4-hour wick right here, then this would be a good zone for us to exit the market, right? So we know how we're going to enter, but we also need to know how we're going to exit. Okay, this is important. Okay, so far so good. For a 4-hour gold bar here, 4-hour gold bar here, and this is where it really is like art, because there are other wicks here. Well, which wick do you pick? Which wick do you pick? And this is all in the, beauty is in the eyes of the beholder, right? Art is in the eyes of beholders. So every trader is going to see something a little different. That's just how it is. And so I've come up with a couple of ways that I determine what wick is important. Here's how you identify an important wick. Where did price have a reaction? Meaning, price come down and then gave us this green bar and it reacted right here. So that one right there is important. So is this one right here, because it took 4 hours for this to be created. So that right there is important because this identifies a reaction zone or a reversal zone. Meaning when price came down, it reversed and came up, right? And then when price went up, it reversed and came down. So these bars right here are most important. That's all we need to know. Okay, super simple. So what do we learn so far? Identify a trend, we're going up, which means we're looking for buy opportunities. Identify 4-hour wick zones, which we found here, 3 different zones. And there's probably one sitting up here that we may see on Friday. We don't know. Typically Fridays don't really give us that kind of thing, but sometimes it does. Now, I want to jump to 30 minutes. All right, so now we can get a lot more information from the 30 minute. Okay, what do I see? I see that there is a couple of candles right here that left pretty significant wicks. So I'm just going to keep an eye out for that, okay? And see how price reacts to that zone. Not necessarily going to put anything up on the chart yet. All right, what else? All right, so I have this trend line that we already broke through going up, but there's also a trend line that I can mark up based on this 30-minute high, right? And I come down here to this little peak right here. So we have this peak, a valley, here's a peak, and then now we're creating another valley. So what are we anticipating? Another peak. So this would be a great opportunity for us to look for buys. Come on, we're almost there. So now we can say, if we get into a buy, we're going to take it up and see how it reacts to this trend line, because it may just come up, touch the trend line, and bounce down. We don't know. We just react. We don't have to know. What else would be amazing is that if it comes up, kind of bounces off of it, and then bounces through it, right? This kind of thing. And we have a potential holding situation. So anyway, we can hold it and see if it goes up higher. All right, so here we go. So it's 7:30 right here on this candle. So what I want to do is I want to go down to 5 minute. Now each candle is only taking 5 minutes to print, okay? So we go from the daily to the 4-hour to the 30-minute to the 5-minute, and that's it. Now we created like our own little playground for price to just bounce around, okay? Now without that, without those markings, it just looks like this, and it's blank, and we don't know what's going to do. But when we add the markings, when we add the art to it, it kind of gives us a little bit more idea of where price could potentially land, where it could potentially go. And once we identify where price potentially can go, then we can enter a buyer's or a seller's position. All right, so what I do is I wait till 8:30. All right, right now 8:30. That's when the market opens. New York Stock Exchange opens at 8:30 Central Standard Time, 9:30 Eastern, right? Because it's in New York. So 8:30 a.m. Central Standard Time. So I'm gonna fast forward these candles till we get to 8:30. So there's 8:10, and every 5 minutes, 8:15, right? 8:20, 8:25. And now this next candle is going to be very important because this is where you're going to see the volume of the market. That means that a lot of people, a lot of businesses, a lot of banks, a lot of hedge funds, a lot of different organizations that hold money are about to put their money into the market because they're doing the same thing we're doing. They're trying to catch more. All right, so right here, we see that at 8:30, the market first came into this gold bar, and then it started to go up. All right, so just because it started to go up doesn't really necessarily mean anything. There's a couple of things that I want to see first, okay? I want to see price. If it does come into this area, if you're risky, you can take this for a buy entry right now. Why? Because we're anticipating price going higher. So what I just put on the screen is something that identifies I'm in a buy. And I'll talk through what this red zone means very briefly and what this blue zone means very briefly. What that means is the red is called the stop loss. That means I'm going to stop from losing. If price comes down and I've entered as a buyer and it goes down, that means I'm losing money. And this particular line is going to identify when do I stop losing money right there. And I'm going to make it red. Okay, so you can see it. So that line is my stop loss line. That means that I have predetermined that I'm going to risk this amount of money entering as a buyer. So at this point, it's 50 points, which I can put a penny into the market and say, all right, I'm only risking 50 pennies. Okay. Just for example, I'm going to risk 50 pennies, and my goal is to get 75 pennies. That's going to be a 1 to 1.5 risk to rewards. So my reward potentially is going to be 1.5 of what I've risked. Simple math. Okay, but that stop loss, if I didn't have a stop loss, right? If I just entered in some, then I think it's going to go up without a stop loss. This next candle could just completely wipe out my stop loss and take me out and take all my money. But because I have a stop loss and I'm protecting my trade, I'm gonna only risk this amount. All right. So now let's see where this trade takes us. If we go forward in time, the next candle takes us out. This is why I say we need to have a few more things involved or giving us more of a confluence of what's happening with the market. Okay. All right. So we have this huge push down, right? But that doesn't necessarily mean that we enter into a sell because of this gold bar. And I also use a couple of different other tools that TradingView offers. One of them is this right here called, it's basically a line on the chart saying when this price crosses that line, I'm gonna enter. And it does cross the line. But because we're in this area here, I need to predetermine what could potentially happen in the market, right? My estimation is price comes up, right? And gives us this kind of move. And because we are looking to go higher, it 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 does this kind of move sort of deal and then goes higher. So that's the predetermined idea that I have for the entire day, right? So I have to just sit and wait, basically. All right. Okay, so it makes a lower low, and now check this out. It crossed beneath our zone here. Now, if you were to take a sell, that's why I said you got to have a few more things involved. If we took a sell when we risk 50 right here, right, and we go to 1 to 1.5, and we want to make 1.5 reward, right? Something like that. All right. So then we watch this. It goes down a little bit and then shoots straight up. You got to watch those. You got to watch those. You got to be careful. Which is why we have to have a few more, and we'll discuss more about what is required for us to enter, probably in some more videos. But I am interested in what price is doing here. All right, and a lot of trading is just watching these candles print. Okay, all right. So what I see here at, let's look, 9:15. At 9:15, we see a lot of volume going up. Okay, we see a lot of volume going up. So this could potentially be an area that we look at as a buy right here. All right. So now 50 points stop, something like that, going to 1 to 1.5. We never know. We just react. There's a couple of things that we can keep in mind as price prints. So this next candle tells us, hey, it might just not go up, right? So we just wait, and see what price wants to do. Now, there. So right there, this particular entry is gone. This one loses, which there's always going to be opportunities to learn, right? And then there's just going to be opportunities where we're just wrong. but because we're still interested in taking this thing up, we're going to look for opportunities to go higher. All right. So we keep watching price print, and then here's 10 a.m. All right, 10 a.m. kind of comes down, but it doesn't give us any lower than that, right? So here, let's see what time we got. 10:20. All right, so now we're getting lower. Now we're getting lower. Here comes more bullish volume. I'm telling you, a lot of times it's just waiting and waiting and waiting. All right, so right here, we see price at 11. Give us another opportunity for us to take this buy, take it all the way up. Well, as you can see, we've been going down. How probable is it that price will go up? You don't know, we just react. And based on our rules, we'll have to go over the rules on another video, but our rules basically state that if there is an area of support or area of rejection, meaning price has not gone lower, right, or higher, right, area of rejection, then we can enter when the price gives us this line flip and a BOS, break of structure. So here's our break of structure. The line flips, right, and we exiting this area of rejection right here. All right, so we don't know. We just react and we target 1 to 1.5, just like this, and we wait. We grab our cup of coffee and we wait. All right. All right, so it takes us out of this trade. Man, I'm telling you, some days it's like that. Some days it's like that, but it's good that you're seeing this on this video because we stick to the same rules. And well, you're saying, well, these rules don't work because you already tried several times and it still hasn't worked. True that, but we still keep using these rules because the probabilities are still there for us to take this buy because we're in an uptrend. Okay, so we're going to continue to wait. All right, so here's our next favorable entry. Now, this is gonna be 50 points loss. I know the air just kicked on, so it's probably really loud. There's 50 points risk. Again, there's our 50 cents. We're going to 1.5. All right, now let's see if this is the moment where price wants to continue up. All right, so we see some movement there that goes in our favor, and then we see a candle that says yes, we want to go up higher. So then we see a couple of more opportunities where price is coming up, and there we hit our target. Right, so here's what I also want to keep in mind is that just because it hit my target doesn't necessarily mean I exit. Price could continue to go higher. So I want to target where I think it could potentially go. All right. So if that's the case, I would be risking 50 to get close to 180. Right? So let me make that 180 right there. So that's 1 to 3.6, right? 1% to 3%. So I'm risking 1% here to get 3%. Now that would be an amazing trade. All right, so we continue to watch price print. All we're doing is watching and waiting. Now, one other thing I'll say is because I still have my stop loss line here, once I see it make this kind of move up, I don't want to risk any more money because I've already used my money for these two trades over here that didn't end well. So I'm not going to risk any more of this money. I'm going to move my stop loss into profit so that it's a risk-free trade, okay? And if price comes down here and tags this, then I'll be out of this trade, but I won't lose any of my money anymore, all right? All right, so we continue to watch. Why is it saying? Okay, right there, and it looks like price is gonna even out right there, and then the end of Friday, boom, there we go. All right, so it looks like Monday we'll see, but what we got here was 1 to 2. So basically, this one trade mitigated these two losses. Because of these two losses, I had to use one more to get 2. So that was a break even trade day. All right. So this is just one of the ways that we approach the market. And there's always things that happen in real time that we have to be mindful of, right? And one of them is when we look at the higher time frames, it starts to show us a couple of different ways to view the market, right? So we also would have kept in mind that there are new 4-hour candles happening, which gave us this sort of setup. All right, so we already kind of knew where we were going in real time. But the more you look at it, the more it starts to make sense. And yeah, so that's what's amazing with this type of approach. Well, I appreciate you making it through this video. It kind of turned out a little longer than I expected. But if you made it this far, then hopefully then we've gained some value out of this deal. If you're watching this on YouTube, Facebook, Instagram, Twitter, TikTok, Snapchats, all that stuff, then hit the like button, share it, leave a comment. Thanks for watching. I'll see you on the next video. All right, peace.